It's currently the final hour of the markets, and there's a few trade setups that look interesting. Let's take a look at our Volatility Box live scanner to try and find some stock reversal trade setups. I'm going to focus on just the S&P 100, and if we take a look at what we have here, we have a series of stocks. You should notice that there's a few of them that appear multiple times for each of the different setups that the stock is triggering. Now, for the different stocks, we have Morgan Stanley, NEE, Pepsi, Kraft Heinz, Johnson& Johnson, Honeywell, and Colgate Palmolive. Out of all of these, Morgan Stanley and NEE are breaching their daily models, and the other stocks are all breaching their hourly models. Across the board, however, all of these stocks are breaching their aggressive models, and all of them are giving us some short side setups. So that tells us that we have short side setups. It's just a variety of which models we want to choose. So now we need to find which trade setups we like. Now, one that stands out to me is Morgan Stanley, mostly because that's the one with the 100% here on the scanner. There's also 3 different occurrences of it. And if we take a look at Morgan Stanley on the chart, to me it feels like we're getting close to where I would expect to see some profit taking. Now, for the past 5 days, you can see Morgan Stanley has just been chopping around. But today, we're seeing that volatility accelerate. And the way I'm viewing price action, it feels like we had the morning rally. And now we're struggling to make new highs. It feels like we're starting to teeter off here a little bit. Now, instead of sitting here waiting and watching, I want to automate my entry. So what I'm going to do is right click, sell custom with OCO bracket. Now inside of this, choose a quantity you're comfortable with, and then select the settings icon. Inside of conditions, I'll select Morgan Stanley, select edit, navigate to ThinkScript editor here, and I'm going to type in this simple line, which is plot signal is equal to whenever our momentum cross gives us the down signal on the previous bar. This means the 3 EMA has crossed below the 8 EMA, and we want to trigger this when this condition is true. Once I have that, I'll link our limit to the ask price, and I'll get a little bit greedier by, let's call it 6 cents, an arbitrary amount. I'm going to cancel this order if it hasn't triggered by, let's call it 12:45. So we can remove this, and we just have our cancel order. I'll click save, and now we can tie in our exits, which is just a plus or minus $1 for right now. And now thinkorswim is going to wait and watch for momentum to cross. So you can see on this current bar right now, we see this pink dot. That pink dot tells you that as of right now, the 3 EMA is crossing below the 8. So if that continues to hold in the next candle, we will try to join, get short, 6 cents greater than the ask price, trying to essentially join and get short. That's what we're looking to do here. Now here's what happened with Morgan Stanley. The market's now closed. We saw the sell-off all the way down to our target line and essentially just completely reversed back into the close where we went all the way back up to our volatility box models. That tells me that we're now chopping right back where we saw that sell side activity, and in after hours activity so far, we're seeing more of the sellers dictating price. Very illiquid so far, so I don't think you can make any jumps, but that tells me that so far we're seeing resistance near this 131 level. We come into the daily time frame chart, we see 1, 2, and 3 edge signal confirmations, along with these Keltner channel wedges, all of which is telling us that we are seeing signs of exhaustion. So we might break above it, sure, tomorrow, depends on what we see. However, we're starting to see sellers or buyers are exhausting here. Each time we come up into our volatility box models, we're seeing the sell-off. Now we want to see when the buyers start to weaken off and the sellers take over control for this larger V-shaped reversal and maybe even this gap fill closer to that 122.50 mark. So this was a trade in Morgan Stanley from today, all of which stemmed from our volatility box models. I hope you found this video helpful for all of our volatility box members. One other thing I wanted to show you before concluding this video is how, if you're in doubt at any point, you can just use the market internals to help you figure out when you want to actually take the entry. Here, for example, we used the cumulative ticks, and that overlapped with Morgan Stanley helps you figure out where you actually want to take your entry. Same thing with the other stocks that we saw. Pepsi, you see something similar. We see the same signal when the internals are agreeing with the overall volatility conditions. Take care, everyone. Good luck trading, and I'll see you in our next update.